Thanks for staying with us. You're watching First Trades live on ET Now. Straight after Mr. Sunil Duggal, Chief Executive Officer of Dabur India, joins us live from New Delhi. Sunil, morning. Thank you for joining us. Let me start with a very basic question, or a rather broad-based question. In the current environment, in the FMCG industry, who is enjoying pricing power, the company or the customer?
I think the company does have some pricing power. Most companies do have. Having said that, the competitive environment is pretty severe, so it does not facilitate quick upward movement of prices. But I think the consumer is willing to accept a price increase. There doesn't seem to be any demand destruction on the back of fairly high price increases which happened last year, at least not for us. So I think the consumer is willing to accept price increases. Sometimes the competitive situation does not permit that to happen.
Sunil, hi, morning. So are you at Dabur also mulling a price hike due to the increase in excise duty as well as higher raw mat prices?
Unfortunately, yes. We were hoping to have a fairly moderate price increase scenario in the coming year, coming fiscal. That is not likely to happen. I think inflationary fires continue unabated, at least in the early part of the year. Hopefully they'll cool off in the second half, but there's no guarantee. On the back of this, we would be seeing price increases, particularly in the second and third quarters. We'll probably keep a cap on prices by and large in the first, but if the upward movement of prices happens in the second quarter, I think we'll have no option but to take up prices.
Which are some of the key categories where Dabur India is growing faster than the industry average?
I think in most categories our exits of last fiscal were ahead of market growth, and we do hope to maintain the growth momentum as far as the revenue side is concerned. So there's really no pressure there. It's really at the margin front that we are seeing near-term pressures, which hopefully will abate.
Sunil, I just want to get back to the price that you were making about a price hike. Have you decided or frozen in on a quantum of price hike, and would it be across the board or would it be a certain category where you would be looking at hiking prices?
Yeah. No, it's always category specific. There's an element of opportunism here which comes into the pricing scenario. But if you average it out, we would be looking at around a 5% increase in price in fiscal 13. And I hope we can cap it at 5%. There's a possibility it might go ahead of that. But as we speak, it looks to be in the region of 5%.
And how soon can we see one?
Like I said, second quarter is when the price increases would begin to surface. We will be able to then get 6 to 9 months of price increase coming into our financials in this year. First quarter, we would perhaps be a little bit more watchful and not do any major price increases, because we have done so in the third and in the second and third, mostly in the third quarter of last fiscal. So we would wait for things to settle down a bit in the first quarter before we take up prices in the second.
Right. So, Sunil, let me split the Dabur business into two. First, the new business and then the old business. What kind of growth do you expect in your old business and in your new business? And then what kind of volume number we should expect from Dabur India when it comes to the blended growth number?
Well, we would be seeing growth in the mid to high teens at the top line in this current year. And the old businesses would be obviously a little bit lower than the new businesses. So low teens in the old and high teens in the new is broadly the construct which we will see aggregating to a growth in the mid to a little bit ahead of that number.
Sunil, one talking point is the currency and the impact that it has on Dabur. Considering the rupee is at a 3-month low, what is the kind of impact that you've seen by way of currency fluctuation on your margins, considering you import approximately, 40% of your raw materials?
It's more like 20-25, but then we also export, so there's a bit of leveling off there. But the weaker currency does, fuel inflation, and obviously the oil prices and the oil derivatives are one such example. So overall, it's factored into the inflation, and the currency fluctuations per se directly do not impact us to the extent of the currency impact, but it's really the inflationary impact which does play on our margins.
What about your international business? Because the margins there have been somewhat declining. Do you see them improving now in FY13?
Yes, I think they will. The inflation scenario outside India is a little bit more benign. I would see margin improvement happening in our overseas business, particularly in the MENA region. While they may not come back to the peaks of 2011, but they certainly would be ahead of what we saw in 2012.
So as percentage of your total sales or total revenue, how much is coming from international business? And this is FY13, let's say by FY15, do you see that number changing dramatically?
FY13 would be in the region of 30%, and FY15 would be a little bit ahead. I think 1/3 or 35% is what we would see as the mix. So we would still be fairly India-centric. 2/3 or something like 65% of our business would be from India, even the next 3 years or so. The only thing which would change the whole dynamics of the business is if we do a large acquisition overseas, which I don't think will happen, but you can never rule it out.
You know, Sunil, boardrooms, they always plan strategies and then markets realize the after effects of those strategies. So in terms of new launches, in terms of new initiatives, in terms of new products, what should we expect from Dabur India for the financial year FY13?
Certainly a much higher level of aggression in terms of introduction of new products. I think we were pretty circumspect in introducing new products in the last 12 months because the inflation caught us a little bit by surprise, but now that has been factored in. We are budgeting a significant amount of money to fund new product introductions, and you will certainly see far more activity on this front in fiscal 13 than you saw in the last year or even the year before last.
Good to have you on the show and appreciate you having a candid chat with us about your margins as well as the pricing trajectory as well. Let's quickly bring up Dabur, considering it's the entire FMCG as well as pharma space which seems to be holding out in a market environment like this. 105 plus levels is where Dabur is currently. The Sensex though down about almost 163 points. The Nifty just about loitering around the 5200 mark, 5192 now actually in trade, so it's down about almost 51 points or so. We'll take a quick break.